Welcome back. You're tuned into Buy Now Sell Now. We're getting all your questions answered, and let's get going with all the questions. Then this is coming in on WhatsApp. JS Gujral is writing, and he says he holds Syrma SGS Technology, and we first, before actually we get going with that, we also have the management of Syrma SGS that is joining us today. JS Gujral, who's from Syrma SGS Technologies, is now joining us. Hi, good morning, sir, and thank you so much for joining us. Sir, there's a lot of discussion around the PCB manufacturers facing significant cost inflation and seeking substantial price increase. From Syrma's perspective, how much of this cost pressure are you seeing today, and has it had any meaningful impact on the margins or operations so far?
Okay, now for the specific of the PCB industry, there are two hits to the costings which have come in. One is the rupee depreciation. It has depreciated from 85, 86 to 95 or whatever it is. And bulk of the materials currently being imported, there is a direct impact on the increase in the cost of raw materials. And the second is the metal prices. Copper has gone up substantially. Now, the metal prices are universal to the world. So it's not only specific to India as a country. The currency depreciation would be specific to a country, and we are analyzing what is the impact of currency depreciation of four competing geographies, whether it is Vietnam, whether it is Thailand or China. So if the rupee has depreciated more than the competing geographies, the Indian manufacturers are at a disadvantage. But as far as the basic metal prices are concerned, I think that's universal to everyone. There we have to see how do we sort of control the cost, have better sourcing, and that can come in only with volumes. Small quantity imports will not help in getting better prices. So I think it's still to settle down. The costs have gone up. We as an EMS manufacturer are being approached by our PCB suppliers, Indian and global, to review the prices. And obviously, when the prices are reviewed, we go back to our customers because this is a universal phenomenon, not specific to one company. And then it's a negotiation with the vendors that, minimum cost increase you give. You go back to the customer to see how much cost increase you can get, and then this sort of arrive at a figure of what is the impact on you.
Right. Mr. Gujral, also, what will be the margin impact if PCB prices rise another 20 to 30% from the current levels?
See, no company is in a position to absorb a 15, 20, 30% in price increase. So ultimately, the customer and the consumer will have to bear the thing. There's no doubt. It's only in the transition phase sort of you may have a situation where there's some time lag between it is given by the customer. End of the day, the customer has to bear this price. No company, no product has a 20% sort of margin to absorb this cost increase. Nutshell, end is the end consumer will have to bear a higher price, because there will be a limit to which my customer can also absorb the cost. And as you're sort of reading that companies, the car manufacturing companies are increasing their prices. So it's a cycle. I think we have to take it in stride and see how best we can mitigate the thing, mitigate the impact. Some impact will be there. There could be an impact that, for example, we are exporting also. So we get some benefit on the rupee depreciation in exports. And then we see what is the net impact on the P&L. Early days to sort of calculate that. You get operational efficiencies as your volumes go up. So it's an evolving scenario as of date, but there will be some marginal impact on the profitability of the companies in the short run, which could be offset by exports, change in product mix. If you have a higher content of ODM, your margins go up. If you have a higher content of industrial medtech, your margins go up. So that is the scenario.
Right. Sir, how are the discussions with the customers also evolving? Are you largely able to pass through the higher costs, or is there typically a lag that could create temporary margin pressure for you?
See, what happens is I'm also a customer to my vendor, so I will resist the change in price, increase in price. Similarly, my customer, when he talks to me, I am a vendor to him, he will resist. Then there's a dialogue and rationality prevails. So if I have to delay the passing of the cost increase to the customer, I'll try to delay it passing off to my vendor. Net, there may be a marginal impact. Sometimes you're in a winning situation, you're able to squeeze your vendor. Sometimes you're able to get extra from the customer. So that's a scenario. It's a sort of a constant tug of war. Uh, if I go to the customer, he's not going to give me a price increase over email. It involves a lot of discussions, a lot of sort of costings, whiteboard costings, you know, white sheet, how it is, what is the increase, what is the quantity, and all those things. Same is the case with the vendors. So I think it is a part and parcel of a commercial negotiation. And as I said, the real impact as of date, I'm not able to sort of quantify that because there are some benefits we get in terms of exchange rates for exports. The product mix may be changing. But yes, within the categories, there would be some marginal impact.
All right, but beyond pricing, are you seeing any challenges around PCB availability, lead times, or sourcing? And have recent geopolitical developments changed how you think about procurement and supplier diversification?
Okay, I'll not restrict this answer to PCB per se. Of late, the delivery lead time of electronic components have started inching up. Post-COVID, we saw a rationalization and the components were available. There are certain controllers, there are certain chips where the lead times have gone up from 24 weeks or 18 weeks to 36 weeks or 42 weeks. This only means that our planning has to be more robust because if there's a component which is a 42-week delivery time, which means it's almost like 11 months. So my customers have to be more sort of agile in giving their forecast, and I have to place orders on my vendors. But yes, the delivery lead times have gone up in the electronic ecosystem, and these are primarily being driven because of some geopolitical thing. There's a memory chip shortage. We are not big users of memory, so we may not be impacted too much by it, but that is the impact. Then the prices having gone up and supply chains having been disrupted because of the Middle East war, there is an elongation of the lead times.
Right. Also, given the current environment, does the strategic importance of your upcoming Andhra Pradesh PCB facility increase? And how should the investors really think about it? Its role not just in the reducing the sourcing dependence, but also in improving the value addition and the margins over time.
See, I think all Indian manufacturers who are putting up capacities would not be too much greatly adversely affected by it. In fact, what happens is the dependence on the Indian companies for supplies sort of insulates the Indian customers from exchange rate variation, direct exchange rate variation. Because if I am importing a PCB today at say $1, the dollar appreciates by 8 rupees, my cost goes up by 8 rupees. But if I'm buying it from an Indian vendor, my cost will not go up by 8 rupees. It will go up by the proportion of the cost of the raw materials which my vendor is importing. So I think the Indian PCB industry would serve the domestic customers in a better way than they are being served by the imports today because of a direct hit of foreign exchange fluctuations. Overall, I think over a period of time, I think we are starting production sometime early next year. I think it will take a while to stabilize the production. But overall, I think the Indian PCB industry in the coming years will be benefited by it. It will not be adversely affected by it because cost increase of basic material is universal.
All right, but then given the strategic importance of the Elmaster JV, and can you discuss the revenue visibility over here before we move on, and early customer engagement from Elmaster's global OEM ecosystem, and whether the platform can evolve into a scalable high-margin export business?
No, the PCB, I can share what we are planning and what I think everyone is doing. Whenever we talk to a global customer for our electronic assembly business, the existing business, and we inform them that we are putting up their PCB plant, their interest is significant. And they go down to the next level that, okay, you are going to make PCBs in India. What about the materials which go into the PCBs? Are you decoupling them from the China supply chain? And by when? So the interest of the global business community in having alternate supply chains for PCBs is immense. I think the Indian industry, supported by the government as it is being supported by the government today, has to be aggressive in their approach and try and capture global market. There could be a small entry pricing concession also, but we should capture the global markets because the long-term sustenance of any business is going to come in from exports and not only from domestic. It has to be a healthy mix of domestic supply and exports. So as I shared, we export about 25% of our production. And we plan to take it up to about 33% in the coming years. That's only a risk mitigation exercise. So we cater to the Indian demand, which is there. We start gardening hunting and gardening the global demand because that's not going to emerge on day one. It will take time, maybe 6 months, maybe 1 year. But we have to start working on that front. Whenever we start working, it will be 8 to 12 months before supplies can begin. So the two things have to be parallel and not sequential. That I first cater to domestic demand and then I start going for global demand. While I'm satisfying the domestic demand, I have to hunt for my global customers also, parallelly.
Right. So also, given your focus on reducing the working capital even at the cost of some growth opportunities, what is your target working capital level and how much growth are you willing to forego or to achieve this?
See, that's a very difficult. We would like to, as I said, the objectives for us are very clear. Have a 30+% growth, a 30% plus growth in EBITDA and a positive cash flow, operating cash flow. Now, as far as those three parameters are held, and I'm confident they can be maintained at the current level. I'm not saying they can be maintained at the 50% level. I'm not saying they cannot be, but at a 30-odd% growth level, these three parameters can be maintained. The vitals can be maintained, and we're working on that. Working capital cycle, ex defense, it had come down to 58 days. With defense, it was 63 days. I expect it to hover around that only. 55 to 65 days plus minus depending on the composition. And if we are able to achieve that, of which I'm very confident, I think it will be a phenomenally good thing for the company that will be able to generate positive operating cash flows along with growth in EBITDA. To us, that is very, very significant and sacrosanct, generating positive operating cash flows.
All right, Mr. Gujral, I think with that, it will be all. Thank you so much for being a part of this discussion today. Thank you for giving your time. And with that, it's a wrap on this edition of Buy Now, Sell Now. But for more on the market, stay tuned. We'll be getting you markets at noon after this break.